Welcome to the Deep Dive. This is where we take your sources, cut through all the noise, and get straight to the insights that really matter. Today, we're diving into something getting a lot of buzz, this new condo launch coming up in Queenstown over at Margaret Drive. You've given us a great set of materials, property analysis videos, some interesting case studies comparing projects. Lots to work with. Okay, let's unpack this, our mission today. Sift through it all, find those hidden gems, and help you figure out why this specific development might just be one of the big stories for 2025. We'll find some surprising facts, maybe have a bit of fun too.
Yeah, absolutely. And it's worth unpacking because this Queenstown project and the area itself, it's got this interesting mix. You've got the known benefits of a mature estate, strong demand, great amenities, but then there's this really smart land purchase the sources highlight. It kind of sets the stage for potential value,
Yeah.
especially for someone like you looking closely at the market.
Sets the stages right. Okay, so let's start right there at the foundation. The Margaret Drive GLS project itself. We're talking a new 99-year leasehold condo, Margaret Drive location, launching second half of 2025.
That's the plan, yeah. And looking at around 460 units, roughly.
And it's a GLS project. Just quickly, what does GLS actually mean here?
Right, good point. GLS just stands for Government Land Sale. Means the state released the land for private developers to bid on. Pretty standard, transparent process. And the winners here, a joint venture. Guaco Land and Hong Leong, they got the land with a bid of $1,154 per square foot per plot ratio, or PSF PPR.
11,154 DSF PPR. Okay, that's the number. For listeners maybe not deep in the jargon, what's PSF PPR? Tell us. And crucially, how good was that price? Was it really that attractive?
Okay, so PSF PR per square foot per plot ratio. It's basically the standard way to measure land cost based on how much you're allowed to build. It levels the playing field for comparing land bids. Now, how attractive was this bid? Well, the sources give us some good comparisons. There was a similar plot, pretty good location over in Buena Vista that went for $3,360 PSF PPR, much higher.
Okay.
And even a plot in Clemente, maybe seen as slightly less prime, still fetched $1,250 PSF PPR.
Right.
So the takeaway is clear. Guacoland and Hong Leong snagged this Margaret Drive site at a super attractive price compared to what others were paying nearby around that time. That gives them a big head start on costs, potentially more pricing flexibility later, maybe more room for buyers' appreciation down the line.
A head start definitely sounds like it. A real advantage. But, a great land price isn't everything. Location is still king, right?
Yeah.
So let's talk Queenstown. The sources call it a very popular mature estate. What keeps pulling people to this area?
Oh, Queenstown's appeal is multifaceted, really. First off, rental yields. They're among the highest in Singapore. So for investors, that's a huge draw, very consistent returns.
Okay, strong for investors. What else?
Then there's the HDB market there. Queenstown has one of the largest numbers of $1 million HDBs. These are public flats selling for over $1 million on the resale market.
Wow. And why is that important for this new condo?
Because it means there's a built-in constant pool of HDB upgraders. People who've made good money on their HDB flats and are looking to buy a private condo, often in the same area they already live in and love. Plus, this specific site is, very well connected. It's just a 5 to 7 minute walk to Queenstown MRT. And it's literally right beside Queenstown Primary School.
So high rent potential, a ready pool of local buyers looking to upgrade, great transport links, a school next door. For you, the listener, thinking about this area, it seems like these factors create a kind of resilience, like a strong base demand no matter what the market's doing.
Exactly. It's that combination that makes Queenstown so robust. Now, focusing on the project itself, how does it compare to what's already there right nearby?
Yeah, let's look at the neighbors. How does this new kid on the block stack up?
Okay, so the sources point to two key comparisons, both launched back in 2018. Sterling Residences and Margaretville. Sterling Residences, interestingly, has already seen deals happening above $2,600 PSF back in 2022. And it'll be about 7 years old when this new Margaret Drive project gets its TOP.
Top E temporary occupation permit. That's when people can actually move in, right?
Correct, yeah. The handover point. Now, the analysis suggests this new Margaret Drive project is actually more similar to Sterling Residences than Margaretville.
How so? What's the similarity?
It's about position relative to the MRT track. Both Sterling and this new site have what they call a second row advantage, meaning they're close to the MRT, which is great, but they aren't right next to the above ground track, so maybe a bit quieter, less direct noise.
Okay. And Margaretville?
Margaretville is more front row, right beside the track. And the walk to the MRT is apparently a bit longer, maybe closer to 10 minutes. So it's a subtle difference in the immediate environment, but one that buyers might notice.
That makes sense, that second row idea.
Okay.
And what about the track record for Sterling and Margaretville? Sounds like they did well.
Extremely well, according to the sources. Both apparently recorded 100% profitable transactions, which is pretty amazing, and many owners saw very attractive capital appreciation.
100% profitable.
Yeah.
That really says something about demand in that specific spot, doesn't it?
Hmm.
Definitely encouraging for a new project coming up there.
Absolutely. It signals a very healthy market and strong holding power for properties in that vicinity.
Okay, now here's something I found interesting in the notes. The plot ratio. The Margaret Drive project has a plot ratio of 4.2, but Commonwealth Towers and Queen's Peak nearby are higher at 4.9. Now, instinctively, you might think lower ratio means less valuable or less potential, is that right?
Well, here's where it gets really interesting. A lower plot ratio isn't necessarily a bad thing at all. Sometimes it's actually a plus. It basically means you can build less total floor area on the same piece of land. So the development might not be as tall or crucially as dense as its neighbors.
Less dense, meaning fewer units packed in.
Exactly. And depending on things like height restrictions, it could mean the developer is kind of forced to use more of the land for, say, facilities, landscaping, open space, rather than just building vertically. Think more breathing room, potentially.
So it's not less valuable land, just used differently, potentially creating a better living experience.
Precisely. Let's look at the specifics. Margaret Drive, about 102,000 sq-ft of land, 460 units. Compare that to Queen's Peak. Slightly bigger land at 113,000 sq-ft, but way more units, 736. Or Commonwealth Towers, 130,000 sq-ft of land, 845 units.
Wow, yeah, that's a big difference in density.
It really is. So this lower density at the Margaret Drive site could actually be a major selling point for buyers who want that Queenstown location, but maybe prefer something a bit less crowded, perhaps more premium feeling.
That definitely flips the script on plot ratio. Okay, let's get to the big question, price. What are the analysts projecting for the launch? Any guesses?
Okay, price predictions. The sources offer a couple of views. There's a sort of baseline estimate factoring in land costs, construction fees, finance costs. That puts it around $2,500 PSF.
$2,500 PSF.
Okay. Then there's a more, let's say, aggressive prediction. They looked at another project in a similar mature estate situation. That one averaged $2,700 PSF, and some units even hit $3,000 PSF. So based on that, the suggestion is the Margaret Drive project could potentially push above $3,000 PSF, especially maybe for the smaller 1 or 2 bedroom units.
Above $3,000. That's quite a leap from $2,500. What's the context? What are older places nearby selling for now?
Right, context is key. Resale condos already in that area. You're seeing 2-bedders go for between $2,100 and $2,400 PSF. And 3-bedders have gone up to $2,451 PSF. So the resale market is already quite strong.
And I remember a tip from the sources. It's super low risk if you can grab a brand new unit at close to comparable resale prices. Given those resale numbers, even if it launches closer to the $2,500 mark, it does sound like it could be one of 2025's, well, value buys.
Yeah.
Especially with that lower land cost baked in.
That's the potential, yes. The fundamentals, the location, the demand, that land price, and they line up quite compellingly.
Okay, now this next bit from the sources really caught my eye. It's a deep dive into 3-bedroom layouts specifically. Comparing Commonwealth Towers and Queen's Peak again, here's where it gets really interesting, because the results were maybe not what you'd expect.
Yeah, this was fascinating. So overall capital appreciation for both projects from launch around 2016 to early 2025 was pretty similar, like 33, 34%. Both did well. But when you drill down to just the 3-bedroom units, the story changes. Commonwealth Towers 3-bedders, they appreciated about 43%. Queen's Peak 3-bedders, only 37%.
Wait, so Commonwealth Towers, that's the older one, right? TP 2017.
Correct.
And Queen's Peak is newer, TUP 2020.
Right.
But the older projects, 3 beds, did better in appreciation, like 1% better per year, roughly?
That's what the data showed, yeah.
That seems backwards. Why? Why would the older units outperform the newer ones?
It really comes down to the layouts, the design of the units. Commonwealth Towers 3-bedders units like the 904, 1033, 1055, 1076 Square 11s were described as really efficient. They typically had proper enclosed kitchens, good-sized living, dining areas, often a utility room, maybe a WC, a yard space. Practical stuff. Even the smallest 904 Ace Suite 1 managed an enclosed kitchen well, and the profits people made selling these, pretty impressive. $500K, $600, even $700K in some cases, sometimes even after holding for just 3 years or so.
Okay, so practical, efficient, family-friendly layouts. What about Queen's Peak's 3 beds?
Queen's Peak showed more variety, maybe some trade-offs. Sizes like 947, 840, 936, 1011, 1055 psyched feet. Some had luxury features like private lifts, the 947 and 145 square foot ones, for instance. But often that seemed to come at the cost of an enclosed kitchen. They had more like a kitchenette.
Ah, private lift but no proper kitchen. That's an interesting trade-off.
Yeah. Other units, like the 840 square foot one, did have an enclosed kitchen, but were maybe just smaller overall or lacked storage. Some designs had long balconies running across multiple rooms, which isn't always ideal for usable space. And the profits on these, generally lower, more in the $300K to $400K range, though some hit $500K with longer holding periods.
So the big takeaway here is practicality trumps perceived luxury, at least for this market segment. Things like a proper enclosed kitchen, efficient use of space. These might actually add more long-term resale value and appreciation than, say, a private lift, especially if your target buyers are those HDB upgraders who likely value functionality for family life.
Exactly. If we connect this to the bigger picture, this raises an important question for you, the buyer, doesn't it? When you're assessing a new launch, beyond the hype and the price tag, how closely are you really looking at the floor plan, at its livability, its long-term appeal to the next buyer? It's subtle, but as this comparison shows, it can make a real difference to your investment outcome.
It really can. Definitely food for thought. Okay, let's wrap this up. Quick recap. We saw the Margaret Drive GLS project has a significant land cost advantage. Queenstown offers strong, resilient demand drivers, rental yield upgraders. The project itself has promising attributes, like potentially lower density. And crucially, we learned how much layout choices matter for long-term value based on the Commonwealth Towers versus Queen's Peak example.
Yeah, summing it up, Margaret Drive looks like a really compelling opportunity on paper, especially if that launch price lands competitively against the current resale market there. That low land cost is a great starting point.
Right. So here's a final thought for you to mull over. Considering everything, the land cost, the Queenstown advantages, those layout lessons, if this Margaret Drive project does launch at, say, an average of 2,600, 2,700 PSF, maybe even higher, what do you think? Is it a good buy? And how fast do you reckon those units would sell? Something to ponder. Well, that's all the time we have for this deep dive. Thanks so much for joining us and lending us your ears. If you want more info on what we discussed or have your own take, feel free to connect. You can reach out to Emmeline directly at 947-69486. That's 947-69486. We'd love to hear from you. Until next time on The Deep Dive.